overcomplicated market structure. So let's just start here, for instance. So we have a break there. So we want to put, I'm on the daily, so daily boss. So that is a break. We broke the low with a close. So that is a break there. And then you keep going down and you can mark up the money candle is the last candle that took liquidity before the break. And as you can see, it is this wick here. So you can mark that as a daily boss. And then we just keep following price. So down here, we start to pull back. Does it break? Yes, it does. So we've got a daily boss there as well. And where was the money candle that actually caused it? So this was the highest wick that liquidated to the left and then it closed. So this one, we mark that across. As you can see, we had another close. So then once it is a close, you want to mark it as a break of structure. If it only wicked, then what would happen is, so as you can see here, it only wicked. So then what I would put is daily liquidity. So D liquidity. So a DX means liquidated on the daily but didn't close. So this is the last money candle we're interested in. So as we keep going up, so as you can see, we started to pull back there. So daily boss, and then the money candle that caused it. This one is actually lower than the left candle, but we didn't close beneath, so we're still technically bullish. So that is a daily liquidity. So we swept liquidity on the daily there, and we just keep going up, just keep following it. So here we had a slight pullback. We wicked it first, but then we did eventually close it. So then same again, daily boss. And as you can see, the money candle that caused it, the wick candle liquidation is this one. So then daily boss there, just to keep it in that range there. Same again. So we start to pull back here, daily boss, nice and simple. There's no need to overcomplicate market structure. Like if the more you overcomplicate it, then the worse it gets. So the money candle that caused it, the candle that wicked to the left, that liquidated to the left was this one. So we mark that across. And we don't know, obviously at the time you wouldn't know if this is actually going to close apart from down it, sorry. So this started to pull back here, but we never closed, so we actually liquidated the high. So liquidity, sorry. So liquidated that, and then we can keep with this money candle then, because this is the last area that would actually cause the bullish push. This was a break with a close, so we'd leave the D. So the money candle that caused the break was this one because it liquidated to the left. So we can mark that all the way across, and it did eventually break with a close. So then it's the daily boss. What was the area that caused the break? This was the candle that liquidated to the left before the push with a close. So this is the area we're interested in. So that is D boss. So we have a pullback here, but there's no money candle, so we're not bothered about that one. We can delete that. And then same again, we have another pullback there and then a close, but none of these are liquidation candles.